Hello active traders, and welcome to Trading Plan Profits. This is Ken Calhoun, your host, president of the original Day Trading University and Trade Mastery, coming at you live here. I wanted to thank all of you for taking time to pick up some strategies on active profit and loss P&L trade management using flow charting, unrealized P&Ls, and more. We're going to be looking at some advanced strategies tonight, so let's jump right into it. As always, all information is for educational use only. I'm not making any profitability nor performance claims. By watching this, you agree not to make actual trades, no advice or recommendations about what the buy, sell, or hold are being provided. You may have seen me in this month's issues, Technical Analysis of Stocks and Commodities. I'm now a regular columnist for the magazine, so look for me in upcoming issues as well. I've committed to doing that at least through summer of next year. So great to be on board with the team there and being able to regularly contribute my thoughts. I put a lot of work into these. For example, this month's article on trading first hour breakouts you can use for swing as well as intraday trades. So that's a featured article in this month's issue as well. Or you may see me at the Money Show International Traders Expos as a featured speaker, like here back this year in February. I was a featured for-pay speaker event. Great to see hundreds of you at my live events as well. So tonight we're going to look at Trading Plan Profits. This is a preview webinar for an upcoming 2-webinar premium series that I'll be doing in December. So I want to give you an insights into what that is about to cover, or if you're watching this video on YouTube in a future year, it's for the downloadable course. Either way, you're going to be learning some valuable, actionable trading strategies you can start using immediately in your own trades. I wanted to first start off by thanking the 170 plus of you for posting your comments. Some really outstanding thoughts and ideas. Really excited to see, and also thank you for the kind words. So many nice positive feedback and enthusiasm from nearly 200 of you from around the world in the last week alone. Makes this a real rock star of a topic, and I appreciate your loyalty. I appreciate your thoughtfulness and your comments, and I always seek to build communities, and so it's great to see you participate. This makes for a much more interesting site than if it's just me. I like it more just me and 200 other traders putting in your 2 cents worth and what you think is important. And that's thanks, Jen, from a true trader. I appreciate the comments and the rest of it. So when you get a chance, go back and take a look through those. I've got 40 more new ones coming. I got 44 new comments that were just posted this afternoon, so I'll be adding those later as well. So thank you very much. I appreciate it. So what you'll learn tonight, we want to give you an introduction to Trading Plan Profits, what it's all about. We'll be looking at live charts as usual. How to use the P&L flow chart. I sent you a flow chart in a PDF. Really good positive comments from so many of you. I thank you for making that something that's a useful tool. Also, active P&L management. That's kind of the core of what this is all about, is doing a little better job of managing not on just chart patterns, but using what the P&L is revealing to you about how you should manage your trades more dynamically and a little more professionally. Also, risk management and scaling, and next steps with the premium course. So we've got a lot on our plate for tonight, and I'm excited to be able to share with you some honest, good content that I've been trading millions of dollars worth of stocks, ETFs, minis, and Forex. I know how to trade, and I wanted to give you some insights that you can start using immediately to hopefully help you turn the corner and make more profitable trading decisions. So let's start off by looking at the flow chart that I had posted, and I want to run through it quickly because we have a lot of ground to cover tonight. I may come back to it later, but for now, let's do a quick introduction to what that's all about. Now, I created the first and only industry flowchart for active day traders back in the year 2000, and thousands of people have downloaded this. This is very specific and detailed. I wanted to make things a little more simple for and a little more actionable for our swing traders as well as the general trading community. So as a former corporate quality management consultant and internal team facilitator and the rest of it for dozens of Fortune 500 companies, my favorite tool to help companies improve how work gets done, and I've been even hired by a Chamber of Commerce to develop the process mapping course for an entire state. I'm an expert in flowcharts. One of the things that you want to do in your trading is map out top down, keep it simple, okay, don't overcomplicate it, but map out major steps in your trading. And odds are, kind of like a flight plan, My colleague Brian Tracy has a great book called Flight Plan, and it's kind of like a checklist of things you need to do to be successful. In trading, you should have a checklist of activities that you check before you put on a trade, and while you enter a trade, and after you trade, and how do you manage the exit, and how do you scale in and out, and how do you close the final trade position, and how do you look at your lessons learned. So let's quickly go through the major steps involved in the flowchart. In the premium course, I'll go through this in great detail. Right now I wanted to give you a quick summary of what to look for and what I'm talking about with each of these major steps. Many traders fail to take a look at the broad market before they put on their trades, and that can be deadly to your trading account. If you're looking at, for example, our S&P, as I record this here on November 18th, 2015, we did a bullish engulfing bounce pivot off the 100 moving average line, but overall it's been in a selling pressure mode that's just recovered lately with pretty good gusto, with pretty good momentum. The last few days, at least 2 of the last 3 days, we got good upside potential and a good bullish engulfing pivot off a major moving average. But the main thing is the net context of the market is overall kind of down, and we'd want to be cautious about new longs. You also want to be able to take a look at market internals. If you're looking at, for example, your VIX, which usually runs contrary to the broad market, and you pull up a VIX chart, you could see it goes up when the market sells down. You need to keep an eye, at least to the corner of your eye, what's going on in the VIX and the S&P and their inverse relationship, and what that means to you as a trader in terms of how to manage your entries and exits, and how aggressively. The whole main point of this is what kind of share size do you put on initially, and what kind of charts do you trade is largely a function of market internals, the VIX, the trend, the tick, the S&P. I want to keep it simple for y'all, but one of the things you do need to put a little more thought into, if you're like many of the thousands of traders, now tens of thousands of traders I've reached with my training in the last 15 plus years, make sure you're paying a little more attention to the trend strength and key support resistance levels. Recent sectors, what sector has been hot lately? What's going on with oil and gold? What's going on with the VIX and the trend? Look at that before you then get all excited about one of these hot charts. Use that as the bias to determine the share size, or part of that is one of your decision-making processes. The next thing is then scan for the rockstar charts. You may want to look at breakouts and gaps, 15-day, 90-day, 52-week highs, cups and uptrends. My swing scan service can help with that, as can my day trading, tradingopen.com live room for intraday traders, swing scans for swing traders, and on your own, what kind of charts you're looking at. By strong charts, I'm referring to ones that go a little something like this. Ka-ching! Are you trading one or more of these charts? You probably kind of sort of ought to should, at new highs, if they break out to new highs. These are some of the strongest breakout charts in our current markets. I've been calling Weight Watchers long since my colleague, my trader Barry, told me about it back here on this day, and I've been calling it long ever since. Doubled from there, so thanks, Barry. It's such a good community of smart, intelligent traders here to work with, and we like to put our heads together as a team for all of our traders at Trade Mastery and Day Trading University and Swing Trading University and the rest of my 70-odd network of sites with thousands, now tens of thousands of traders. Great to see the business. Anyway, recent large candles, good key to put on with increasing volume at new 90-day highs. That's a momentum chart that's worth keeping an eye on. Or steady, well-mannered uptrends like DuPont, which has been going up, and I've been writing on it and telling everybody along this thing in all my alert services last month or so. It's gone up 10 points from its initial gap. Those are the type of charts you really need to focus on isolating as a trader. Or Hawaiian Airlines. You have a good classic Ken Calhoun momentum acceleration ramp. Minor uptrend that then achieves kind of takeoff velocity with even higher volume and continues on up to new highs. We want to wait till it breaks to new highs to continue to scale into Hawaiian Airlines. But from a scanning standpoint, visually, your charts should look a little something like that. It takes many years of experience to find the best charts, and that's one of the things that you want to look at. Is not only is it taking out new highs, but is it likely to continue in trend after you enter that position? So now, the fateful moment has arrived. Bum, 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 bum. Entering your trade, determine your initial share size. In trading millions worth of stuff over the years, what I found was you want to do a lot of small granular trades, and we'll look at real money examples in a second, but you want to decide your initial share size early and often. And for example, my recent trades from a few weeks ago, you can see the share size was only 20 shares, 100, 50, and 30 shares. Still made a few $1,000 on those trades with all under 100 share, about $5,000-$6,000 allocated to those trades. Small share size, right? And so make sure that as part of your decision-making process as a smart trader, what you're looking at from a flowchart standpoint is what are your pilot trade size that you're going to start using. It's absolutely reprehensible and irresponsible. I've actually seen people that would say trade a risky to start with instrument that's leveraged like the E-minis and then do 16 contracts and put on monster trades, and they promptly blow up their followers' trading accounts. Don't go out like that. Or over leveraged, Forex accounts or options trades and all that kind of, or penny stocks or other fool's gold that's going to blow up your account. Instead, do small pilot trades on good strong charts and then add to the winners. Okay, I've published on that a lot, so I'm not going to speak much more on that. I want to give you some new content. Initial stop losses should be tight. I got some ideas there for you. What I want to cover mostly tonight is managing using the unrealized P&L, and that's a core concept of what I want to teach in Trading Plan Profits. Whether you trail a stop to lock in a minimum of 50% or more profit once your initial dollar targets hit, I'll be teaching you how to set those targets and how to figure when to scale in and out specifically in the premium series for Trading Plan Profits. But for now, I'll just give you what you need to do is at least make sure you are doing a better job of managing your trade using unrealized P&Ls. Now, where traders run into big mistakes, let's do a quick audience interaction here, is they use too small or too large, I should say, stops, or they do too aggressive entries and exits on the front end and they blow up their accounts. If you were long DuPont, where would you trail a stop on a swing trade? Let's say you'd bought, 50 shares somewhere during this breakout, somewhere near 60. You added another 50 shares here at 63 since it broke over the 200 moving average. So you're in the money now. You're up. Hey, you could yell downstairs and tell the wife, hey, honey, I'm up, $400 or $500 in the trade. And that's good. But how do you lock in the profit? If you would, all at this moment, type in the dollar figure that you would trail a stop at to get back out of the trade. Let's say you got in during this breakout, and now you're trying to figure out how to take the money and run before the market takes it back. Now, in the premium event, I'll do a lot more interactive activities. We've got just 32 minutes left tonight, so I want to just do one or two, but I'm a big fan of interaction with my audiences. Like when I speak for the Money Show Expos, I always say, turn to the trader next to you and tell us where you'd put your stop. So, thanks, Damon, Stan, Enchan, Vlad, Bob, Don, Mira, Perry, Gene, Dave, James, John. We got a lot of numbers here, 65s and 6s and 4s. Looks like most of them are near 66 and 65. A dollar stop, 64, 65. Yeah, that makes sense. 65. The tightest I would use would be 65.50, and 65 would be the loosest I would use. Okay, no more than a $2 stop. Okay, so if you're in and it's up to 67, you trail a stop 2 points behind the inside market, or put a hard stop. I don't use trailing stops per se. I don't use the broker trailing stops because often they'll pull back and take you out. What I do is manually look at the stop value at the tail end of the day, and I'll teach you how to do that in the premium event. But 65 would be a smart place. Now a bad trader would say 62, or well, you got to give it wiggle room or something down. No, you want to take the money. If I bought here and I bought there, I'm going to bang out of the trade up here at 65, like Phyllis said, or maybe 65.50, half the shares, and scale out the rest and cry uncle if it gets under 65. Let's do one more. Hawaiian Airlines. So that's my answer, at least how I'm going to trade it. Hawaiian Airlines. If you're long and you're right, let's say you're in from 28 or so, you're up a few points. Isn't it much better to be able to shout? I've got a big 4,000 square foot McMansion, so and my home office is upstairs on the upper landing, so I got all the space up here, and so I shout downstairs and say to the wife, hey honey, guess how much I made today? That's a much better thing than trying to conceal trading losses, which is what I did when I first started trading, and I blew up a couple accounts. I didn't want to admit I took a $1,200 stop loss. That's not going to get a nice happy wife. That's going to get I won't say pissed off, but oops, I did, an angry, upset wife. So if you conceal your trading losses from your spouse, your significant other, your pet chihuahua, Yo quiero trading bell. You don't want to do that. What you want to do is take the money and run. So where would you trail a stop, gang? I see a lot of 34s. That's a little tight because you got a bullish lower shadow there. I would use maybe 33.50. That's where I would trail a hard stop. 34 is fine. There's nothing wrong with that. That's a little tight to the range. That's smart, though. I'd much rather hear you say 34 than 31 any day, right? My answer key would be to sell it all if it gets under 33.50, right? If I can take a 5-point run out of a $30 stock, I'm a happy camper. Even if it's only 50 shares and I'm up $250, it all adds up. If I'm in 100 shares, I'm up $480, whatnot. That's still a good trade. Anyway, the point is, as you're looking for these, one of the things I want you to actively manage is using the unrealized P&Ls. Trail a stop to lock in at least half the profit once a profit target is hit. And so what I mean by that, and I'll teach you how to do that in the premium event, is once, let's say you're in aggressive, let's say you're in, I don't know, 200 shares and it goes up here to 31 and you're now $600 in the money. That may be your exit target, or at least the place at which you will start to scale out to lock in a profit on some of the trade. Now, keep your trade management approach simple. We do not use an overly vigorous multiple in and out, 5 times in a week type approach. That just churns your account and makes your broker happy because all the commission load. You don't want to do that. Neither, though, do you want to play it like you're in Vegas and you bet it all on red on the roulette wheel or something, or pull the handle on a $100 slot machine and hope for the best. You don't want to do that. What you want to do is use 2 entries and 2 exits so you dynamically manage your trades. Now, I've covered that before for other people. I got so many new traders, I thought I'd mention that. I'll cover how to do that with some very specific guidelines with current market charts in the upcoming premium event series. But one of the things I want you to spend a lot more time as a trader on, and you have my word, I would tell family and friends this, and people I care about, I guess to a degree I care about all of you too, but the main thing is people who are immediate family, and to manage using your unrealized P&L, how much money you're up or down in the trade, much more so than technical support and resistance in the trade. Okay, so for example, what I mean is, let's take a look at this. Trade management flowchart. The challenge is this, folks. You're in an uncertainty zone. Right after you enter your trade, in your P&L uncertainty zone, you wonder, what action do you take? This is the most important point that I will make for you tonight. And it's a good one. And it's valid. And I've traded millions. I know how to trade. I'll tell you the truth. Your decisiveness in terms of what you do immediately after you get an order fill. For a swing trade, maybe the day after you get an order fill. For a day trader, within 5 minutes or so after your order fill. Anyway, soon after you enter your trade, what action you take determines your success or failure as a trader. And unfortunately, that's not covered by anybody in the trading industry hardly, because those guys are just morons talking about magic chart patterns to get you in and make you rich. And if you believe that, I got a bridge to sell you and you can buy some magic beans. Professional traders, we're looking at managing actively our P&L. Once you're in a sense of uncertainty, what do you do? So for example, and these are real money trades I made. Let's say you're up in the money this much in some of your trades. You're up, well, these are realized real money exits, so I already exited these trades. But let's say it's unrealized and I'm up this much in my trades, or I'm down this much in my stops. At what point do you holler and pull the plug on the trade? New trader, and these are all gap ups, by the way. I sold these at 8:21 in the morning. Pre-market gaps up. I sold into pre-market gap strength on the sign of a bear cup dropping in these guys and locked in a $900 profit before the opening bell on overnight swing trades. This is from earlier trades up to a couple hundred shares back a couple of years back. The point is, the action that you take, as soon as you get into a trade, the problem is you're uncertain as soon as you get into a trade and you wonder what to do. The bad thing that you guys do that screw up your trading accounts is you are slow. You're slow to exit. You're slow to scale in and out. You just stick your heads in the sand. I'm not fussing at you. I'm just saying, based on working with thousands of traders in person, my institutional clients suffer from this just as well as you guys. So guys putting on large size, as well as home traders doing up to a couple hundred shares at a time and whatnot, or 4, 5, 6, 8 contracts at a time or lots. You suffer from the same issues. So what I want to do is give you more guidance on exactly what actions you take as soon after you enter your trade. Your unrealized P&L management shifts. That your attention should shift to managing based on the unrealized P&Ls. and completely ignore, or I wouldn't say completely, but largely ignore the chart patterns. Professional traders, the guys who've been market makers and specialists who come to my Vegas seminars and my institutional guys, it's all about the money. The charts are kind of nice, kind of training wheels for newbie traders, but professional traders were all about, hey, can I rack $1,000 out of the market, take it out today, and be done with it? Or if I'm starting to go red, it's at this point when you start to see red trades, okay, and this is in my Interactive Brokers account, but whatever trading broker you're using, this works fine with that. It's as soon as it starts to turn red, what do you do? And that's kind of my key point for tonight. As soon as it starts to turn red, I'm not saying the second it turns red, but if you're a day trader, maybe 5 minutes after it starts to turn, well, maybe 2 or 3 minutes after it turns red. As a swing trader, a day or two after it starts to go in the muck and it's starting to turn red, what you do, that decisiveness or the decision-making process that you intelligently take as a successful trader makes or breaks you in this business. Bad traders go back to their charts for reassurance, kind of like Linus with is it Linus and from the Peanuts cartoon with a blanket, a security blanket or something. Your charts cannot be a security blanket. Your money is all that counts. I'm in it to get paid. I'm in it to help you guys make money. That's what we're doing together as a community here. The instant it starts to turn red, you should be instantly suspicious, okay? Kind of like going out on a first date with a woman and she starts ordering steak and lobster right off the bat on the first date. You kind of sort of should say, hey, red flag, maybe there won't be a second date, all right? The more experience you get in a lot of parts of life, the earlier detection of red flags you get to see. Or you're trying to hire an employee and you ask them kind of a smart trick question like, well, what if you're not feeling too good, because you stayed up too late one night? Well, the answer should be, well, boss, I don't do that. I don't stay up late on work nights, so that's not going to be a problem. That's the right answer. Anything else, you don't hire that person. Well, you know how it is. Sometimes you got to sleep in late, so I'll just call a personal day. You don't hire that person. Okay? Learn to recognize early warning signs as a professional trader earlier rather than later. If I were to go back over the tens of thousands of real money trades of the millions of dollars worth of instruments I've traded in my career the last 15 years, if I were to go back in time, I'm a big fan of Doctor Who and a TARDIS, or I know they had Back to the Future Day and a DeLorean, whatever. If I could go back in time and talk to my earlier trading self, it would be keep your stops a whole order of magnitude smaller than you started off with. The market will tell you if you're right or wrong. And the instant I'm not saying scale out if it goes down $5 against you, but if you're down, say, $50, $100 in a swing trade, maybe it's time to scale out. Maybe it's time to get out of that trade. If you're in the money, $300, $400 in a swing trade, maybe it's time to scale out, take the money and run. Okay? So use a little more discerning, active P&L management as part of your trading process. Be tighter than what you normally do. That's the key message I have to the world's traders. Right? Now the way you do that, and I'll cover this and how to do it with some specifics. I got 20 minutes left, so we're halfway through. I'll stick around and answer questions. I got 20 minutes left, but the ways you do that, use your pilot trades. You can see the video I did 8 years ago at Mandalay Bay with Tim Berkwin on pilot trades on the website if you haven't already seen it here on the YouTube channel. Trading with pilot trades, looking at position size. Those are some of the basics. What you need to get is advanced tips, and that's what I'll be giving you in the regular premium series. But you want to start off by doing more of each of these things. Pull the lever on each of these things. Be thoughtful. Be intelligent. Be focused on money management. Have very small trades that you start off. I call them pilot trades or small ball trades. Focus on doing that with the strongest charts. Okay? So, if I'm looking at these for breakouts, let's say I want to buy Weight Watchers, it's getting to 28. I'm going to pull up the longer term chart and see if I'm near any previous major resistance I got to be worried about. Well, we've recovered almost the 1 year high at 30. So now's probably a pretty stupid time to buy Weight Watchers anywhere under 30, because you're going to get all the people who are thrilled from buying this, the guys who bought the 60 million shares and all that on this day, on the first good news sign, that have doubled their money. They're going to sell to you up here, son. So you don't want to be the trader that buys up here right under 1 year resistance. You want to wait instead. I'm going to use 3150. I'm going to safety buffer and get in up here. Okay, so if you're in, you want to pull up early warning signs in your trades, and you're looking for the very strongest of the charts for continuation plays. You want to hammer into a trade. So let's say I wait till over whole numbers and over decade values. So let's say if you bought 60.50, then you want to wait for the new 200 moving average line breakout. So you buy again at say 63.50. It's kind of choppy now, so you're going to be a skeptic like I am and wait for say 68.50 for a third trade. Every initial trade, if you'd only traded say 100 shares there, and then let's say you traded 100 shares here and you stopped out and then it ran up without you. That's very frustrating. It's smarter to wait for a good strong breakout. Do an initial small ball 20 to 50, maybe up to 100 shares. Scale in a few points up at a reasonable breakout continuation play, and then scale yet again. So you build the trade and you play with the house's money over time. Okay, whenever I do that in my own real trades, what I'm looking for is opportunities to scale and to build the trade gradually. And then at the first sign of trouble, I'll take the money and run. You want to be a hit and run trader. You know, I mean, this is where I was doing 20 grand worth of, almost 20 grand. What's that? 3, 5, 6, 7, 8, 14, 17. Yeah, it's over 20 grand worth of trades over 2 days. I was trading this 20 grand worth of trades over 48 hours on strength and selling into resistance in these charts. For example, I was selling, you know, UVXY and VXX are my two favorites for the inverse. And I sold those back on September 1st, which if you look at a longer term chart, that's where I sold most of it. That's where I sold a lot of the remainder here. After building an average trade position during the breakout here, I sold there before the market took it back. Now I will rebuy if it recovers. And I use a dynamic entry and exit process so that you easily spot your entries and you easily manage your exits with a little more precision and a little more focus than you may be used to. The main thing is to keep it much easier than what you've seen before, but make sure that you are combining all of these best practices as part of a thoughtful, reasonable, intelligent trade management process. Now the good news is you may only need to make 5 or 7 trading decisions a week. It's not like you've got to do 20 trades a day or anything like that. You want to make sure that you're narrowing your focus so that you're making better trading decisions based off unrealized P&L gains. And as you're looking at your success as a trader, the action that you want to take is once you see your initial unrealized P&L amounts in your trading account, what actions are you going to take? Question mark. And how do you know when to exit? You guys are probably exiting too slow. Based on all the hundreds of people who have been in my, now probably several thousand have been in my live events and the money show, and I ask the crowds and I ask all the big legion of standing room only and cheering traders and all that. I ask people, when do you get out? And I'll ask them, and you know, as part of the premium series, we'll do a lot of interactive P&L management based strategy tips using actual live money charts and the rest of it, so you can see exactly how this works so well for your own trades. But what you want to do is get in the habit of getting out of trades, exiting your trades much sooner than you may otherwise do, and make sure that you're much more dynamic with, say, 2 entries and 2 exits. I know it's more work than 1 entry and 1 exit, but how's that working out for you? All right, so if that's not working out for you as much as you'd like it to, take it from me. I'm an industry expert. I know how to do this. I am a good trader. It took me 15 years, but I figured it out. It's a lot more about the money flow and the unrealized P&L management using not only stops, targets, and exits, but make sure you scale out in 2 increments as a trader. Make sure you got a dual exit play. So when it comes to trading more profitably, what I want you to do is combine smart, simple strategies with entry and exit patterns that can win, and just do it over and over again and be less committed to any individual trade. Kind of like going on a lot of first dates. You know, what you don't want to do is, I mean, if it worked out for you, congratulations. Didn't, you know, work so well for me, but, you know, if you move in with or get married to or get settled down with, you know, the first, you know, nice person that comes along in your life, you're only going on a few first dates, you know, good for you. But most people, that doesn't work. You need to go on more first dates or more small trades that you put on with the expectation that a percentage of them will work out, but most of them won't. And so how do you make money being right? Less than 50% of the time in your trades. Active management using what my colleague Van Tharp would call position sizing or scaling using your unrealized P&Ls is the most important thing that you need to get right as a trader. And I'm going to teach you how to do that in the upcoming Trading Plan Profits 2 webinar series coming up December 3rd and 10th. And I'll tell you a little bit more about that in a little bit. But the first thing I want you to do is just realize that managing off your unrealized P&Ls is the big missing link that many traders don't get right. And the reason is not your fault. It's because most of the educators out there aren't real traders, and they can't teach you how to exit your trades because they don't really trade. They just talk about chart patterns. Blah, blah, it's in an uptrend. Look at my magic, whoopee indicator, and you can get a special discount on my whoopee indicator if you order by midnight. Lifetime license, even only, it's a bunch of hooey. I talked to a lot of the world's trading educators come to me routinely asking to work with me, and after a couple of well-placed questions, I can quickly rule them out as, hey, this guy doesn't. In the back of my mind, I'm too polite to say it to his face, but to their faces. But this guy isn't even a real trader. I'll ask him, how did you manage the wash sale IRS regulation changes from a couple of years ago, mark to market? Or are you doing et cetera, et cetera? How do you manage your exits from a tax wash sale regulation rule? And they can't answer. They're like, well, I don't know, because they're not even really trading. So you got to work with people who are real mechanics like me. You guys are aces and know how to really trade, that are real money traders with proof we really trade. That's where you went wrong as a trader. Is you trusted all the hooey out there from the BS con artists who aren't real traders. So make sure you are. It's not your fault, but I kind of make a big deal out of it because I think working with the real trader with somebody that can prove it. Up to 80,000 views on my Real Money P&L thread from years ago, and it's even from small size. I'd rather you guys do small size trades than large size. Even if you're doing it the hard way, it's smarter to, with $1 commissions, you're still making money. Or if you have a bad day, like $150 down, and I still got to trade, a dozen or 15 instruments, and it only cost me $150. So from a keep your losses small standpoint, and then when you start to make winning trades and you start to scale up and you have an $800 day or whatnot, it makes it all good. You can holler downstairs to your wife or husband or whatnot, hey honey, guess how much money I made today? And that should be the expectation. You say, well, yeah, I took a $10 stop, big whoop. I took a $200 win, that's a little better. And overall I made $800 net profit that day. And that's the type of approach you want to take into your own trading. That's the thing that I teach people how to do. And I think when it comes to separating out who you trust in this industry, the first price of admission should be, or the first criteria should be, hey dude, you're saying you can teach me how to trade. Show me what you did lately. Show me real money trade. Show me your brokerage account. What would you actually trade? And they'll hem and haw and give you a bunch of song and dance BS, because most of the educators are phonies and they're not real traders. So there's some of them are, though. I mean, there's a small handful of us, so that's good. Learn from those of us who actually prove it. And not just like from 200 years ago with the dawn of time, but I mean like last month like I did. So anyway, we're going to enroll in Trading Plan Profits, but one of the things I want to first get back to is our flowchart, and I want to give you some insights that you can start using immediately the very next time you trade. So every trade that you put on should be done with this process in mind. For those of you who are part of large Fortune 500 companies, you may be familiar with process reengineering and total quality management, the Baldrige Examiner, Malcolm Baldrige National Quality Award, for which I was a state examiner. I'm a certified quality engineer. I use all these kind of tools back in the day with my corporate clients. Troubleshoot which one is the biggest cost bucket. Where are you screwing up? Is it scanning? Are you trading the wrong instruments? Well, that'll hose the rest of the processes, cost you more. Are you entering too large size? Are you doing, say, 500 or 1,000 shares out of the gate and losing your butt in the market? Well, that's a screw up, so stop doing that. Check. Can you put a check by each of these? Are you using initial stop losses that are set immediately after trade confirmation? And my colleague Steve Nissen would say, and he's exactly right, when are you the most objective about a trade? Well, it's as soon as you get the order fill, right? It's not after it's up or down. It's immediately after the fill. That's where you put your initial stop and your initial add to winning trade scale entry. When do you add to winners? When do you scale out of losers? When it comes to success in life, and I've done millions in sales and I'm very successful, and thanks all of you for helping make the company such a powerhouse. We've done so well on behalf of tens of thousands of you around the world. One of the things that I really like from a kind of a success coach focus is it's not if, but how. And it's the asking intelligent questions is the key to success. You have to ask yourself the right questions. And if you listen to any of the top people out there, whether it's Earl Nightingale or Tony Robbins or Brian Tracy or Jim Rohn, all the world's finest people out there for improvement of oneself, and I've studied all of them extensively, and a huge fan and recommend all of them unhesitatingly. Many of them will say things like, it's the questions you ask that determine your success in life. And as a trader, you should always be asking this question. If it's missing from your dialogue with yourself, well, I don't scale into winners, I just hope it works out, duh, and you lose all your money, don't come crying to me. If you want to make it as a trader, you got to always ask yourself, when am I going to add to my winners? When am I going to scale out of my losers, specifically? So that's a diamond point decision point. It leads to one of these two things. Once it starts to turn green, the first thing that goes in my mind is let's say I'm in my Fidelity account and I'm in Wynn, the casino stock, WYNN. I'm in Disney too. Anyway, I was asking myself, when am I going to build the trade? Because I started off real small. I ain't going to get rich trading 20 or 50 shares at a time, but I do if I'm up to, say, 200 or 300 shares gradually scaled into over time intelligently. So the types of questions you should ask yourself, and this is good stuff. This is life-changing, strategically valuable. You have my word on this, my honest word on the exact things you need to do to become a more successful trader is make sure that you are asking yourself how you will manage with your unrealized P&Ls. And the exciting thing is it can be taught, just like any good thought leader would say. The good news is, everybody who's successful today was at one point in their career not so successful. It's the shots you take. Like, a lot of people know Babe Ruth was the home run king, but he was also kind of the strikeout king as well. But he took his shots and he became a leader. And what you do as a trader is making sure that you are taking the shots, and you're always having as part of your dialogue as a trader the fact that yes, you will add to your winning trades every time. I always add to my winning trades 100% of the freaking time, because I learned that that's how you make it as a trader. I scale out of my trades. Often I will just scale out 100% of the time. If it starts to misbehave, I show at the door. Wham, bam, thank you. Don't let the doorknob hit you on the way out there, sweetheart, and you're out. I go on a second date or a third date with the ones that work out. All right? So that's what you want to do. And then close your final position. Exit your remaining open trade with either a trailing stop or some chart pattern if you need the training wheels to get you out of a trade, or time-based. I like a time-based P&L stop. If I'm long something and it's freaking putting me to sleep because it's not running up lately, it's like that Janet Jackson song, which is good. What have you done for me lately? Well, okay, let's say if you get in a winning trade and you've patiently waited for a couple weeks, I will often just, get out of the trade at the first sign of trouble. I can always rebuy or reallocate my capital of that trade on a continuation. Whenever you see, and for example, with average directional index, ADX, when it starts to drop down, that means you have a congestion or consolidation sideways line in the trade like this one. I'm sure if we pull up the ADX, it'll be way down here because it's going sideways. You can get out of the trade and use a time-based P&L stop. So I will teach you exactly the mechanics of how to do that in my upcoming Trading Plan Profits Premium Event series. I'm giving you guys 2 webinars, 2 hours plus Q&A. I always stick around and answer every single question. I'm very generous with my time. I want to make sure you get it because I want you to make money so you can keep being my customer 5 years from now. It's a win-win for us all. You won't be around. We won't be having this dialogue 5 and 7 years from now like I have with so many of my traders who have been with me 10 or 12 years if you're not making money. So I want to give you things that can potentially make you a lot of money and stop you from losing money so you still stay active in the game as a trader, and we can continue this dialogue and I stay relevant to your life as a trader. So I'm very honest about that. You'll stay with me as long as I can help you make money. Am I right? When that stops, you go. And that's why my company has gone up 17% sales growth year over year the last several years, and we're up to tens of thousands of people now from around the world, a leader in active trader education. Because I'm a real trader, not like these hosers who pretend they trade. I prove I trade. Like 6 or 8 weeks ago. I'm a real money trader, kind of guy you should learn from. The neat thing is, it can be taught. And as a former corporate trainer, hopefully, I know I move a little fast, but I do have a lot of good content to share with you, so that's why. I don't want to rehash basics. I want to get you into money-making mode as quickly as potentially possible, and you do that by looking at these things. What's the market telling you? Or there's a strong sector that's moving, or a currency, a lead currency like the U.S. dollar has done really well against the world's currencies lately. For those of you who are Forex traders, I know I didn't spend a lot of time on FX, but if you look at, say, And in the premium event, we will be looking at Forex charts as well. Mostly it'll be stock swing trades, but I'll also be spending plenty of time on FX and other instrument categories for you as well. The dollar Swissy has been my favorite chart lately. I told everyone in my week ahead event last Saturday this would be a good long. Was I right? Paching, flawless victory. US dollar has been the dominant currency lately. Okay, doing well against the world's other currencies. So good news for us Americans. If you go travel, our dollar's worth more. But back to it. What's the dominant currency? What are the lead sectors? When you scan, what are the charts? Do they look like these? Once you decide your initial size and you set your stop loss, how do you dig into the mechanics of managing using your unrealized P&Ls? What's the open green and the open red? If it's open red, it's likely something. Good trades are usually right from the start. So odds are, if it's more than say $100 against you in a swing trade, it's going to get worse. So you want to close out the trade. If it's $200, $300, $400 in your favor for a swing trade, odds are it may be going to stall or reverse course sometime soon. So close out at least half of the trade and book a profit early and often. Then finally, you close the final trade position. Dun 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 bum. Exit the remaining open position with a trailing stop or a chart pattern or a time-based P&L stop. Like I mentioned, I will give you the guidelines on how to do that in the upcoming premium event series. And then, for those of you who are a big fan of journaling, I kind of on the fence about it. I like to keep it short and sweet. I don't like to make a epic book out of it. I like to use a notepad, the notepad utility, notepad.exe, and keep some very brief trade notes or an Excel spreadsheet like I do for my live room members, and look for common patterns and commonalities. Were you trading pivots or were you trading breakouts? Were you trading gaps? Were you trading strong trends? What are the patterns, the commonality in your wins versus stops? Maybe you're the rock star breakout trader like I am, and so you're really good at breakouts, especially gap trades like is my favorites, and those are your specialty. So that's fine. So stop doing pivots. Trade what you're making money with. Look for the common patterns that make you the most money. That, for example, is why I run my live room the Tuesday, Wednesday, Thursday, because I found in doing deconstructions on thousands of real money trades, I made the most money trading the open range breakouts during 9:30 to 10, maybe 10:30, Tuesday, Wednesday, Thursday. It's prime time for day trading. Everything else kind of hit and miss. So I found the time frame, and that's why I focus the service on that time window. As a trader, you may find that your swing trades, maybe they're best entered in the middle of the week and not on a Monday or a Friday. Or maybe you want to exit your trades by Friday so you're not holding over the weekend. Whatever makes sense for you on your terms, in a way that makes sense for you, that makes you the most money, is what you want to get at with a very brief thumbnail look at your trade analysis. And I'll teach you how to do that in the upcoming premium events as well. What are your lessons learned? How do you make bigger winners more often? So anyway, hopefully that will help you as a tool of the trade for how to make better winning trades and do it more often in a consistent basis that makes sense for you. This is my first new course in many months. The previous one that I did with Steve Nissen, really popular, hundreds of folks on that from month before last. This is my only I guess second or third new course I've done this year, as I've been focusing my energy on the live room and swing scans. As the membership numbers have skyrocketed, I haven't made as much time for new courses, but this is my first significant new course in quite a long time, almost a year I believe. So Trading Plan Profits, we're now enrolling, and the link to that, let me give you the link. It's only, the good news is it's a bargain. It's only, what is it, $127. I was going to do the $247 and do a coupon code and all that, but I want to keep it simple. So right now, and again, this is registering just for another, a week or so, maybe 2 weeks. So you got 2 weeks to order, so you got a little bit of time. So give it some thought, but it's only $127 for access to both of these. When I turn it into a downloadable course, next January, it'll be up at $249 or $247 or whatnot, but for now, you guys always get the benefit of a great price. You have my word on this. Will be great training. We're going to do 2 sessions, by the way. We're going to do our core training session. That's the main focal point session on step-by-step and picking up where we left off tonight. The core training is coming Thursday, December 3rd from 8 to 9. And plus, I'll stick around at least half an hour and answer all your questions. So oftentimes, that'll be another half hour, even 45 minutes on top of the initial hour of training. So I like to make sure you get it and that all your questions are answered. I'm very responsible and responsive in answering questions. So I want to make sure that I help you connect the dots yourself. It includes high-resolution video downloads, not just some cheap, junky streaming stuff you got to worry about if the site's still going to be there 10 years from now. You get to download WMV Blu-ray resolution 1920 by 1080 video quality downloads in case you can't make it live, and or I'm sure you'd want a backup copy you can go back and watch whenever you want. It will include high-definition video downloads. Really neat thing I've added as a bonus. This alone would be worth the price, but I'm adding 2 webinars for the price of 1. I'm also doing an advanced webinar. I'm so busy, often I will do a core primary trading strategy, and then a few months later do an advanced one and make that another enrollment. But I want to combine this and make it a very inexpensive 2-for-1 series for you. So advanced strategies is coming the following Thursday on December 10th. And so you'll get high definition video downloads of that as well, and so that's included as a bonus. Now who it's for: stock, ETF, E-mini, and Forex day and swing traders, mostly stock swing traders and ETF swing traders, but I will cover some examples. And again, if you have questions about those examples in the premium events, I will pull up charts for those as well to connect the dots for you. So if you trade stocks, especially if you're a stock swing trader, that's the #1 target audience for this. But I'll also cover ETFs, E-minis, and Forex for you for both intraday trades as well as swing trades. And wow, look at that Weight Watchers chart. Not on a diet anymore. It exploded. What happened? Boom, 24 to 28. That's why I like these kind of charts and tell my traders about it in my live room. Anyway, 4-point runner. Anyway, I just get excited about it. I'm a real trader, so I can't look at PowerPoints for any length of time without pulling up a real chart, because I'm a trader. I live off my charts, so the brokerage account. So, but anyway, that's called a pattern interrupt for the NLP enthusiasts. Anyway, big chart, Weight Watchers ahead. But wait till it takes out the 1-year high. Anyway, we've got 2 sessions coming up for you on sequential Thursday starting 2 weeks from tomorrow night. So got a couple of weeks before we get started, so plenty of time to schedule that in. It's for all experience level traders with me personally. Includes generous Q&A time with me at the end, and we're now registering at tradingplanprofits.com/now. But wait, there's more. He just makes it so good. It's irresistible. I'm the expert at irresistible offers. That's why I've got millions of dollars worth of sales from tens of thousands of traders worldwide over the last 15 years. Ba-ching! Flawless. Good team effort. I'll give you a $50 gift coupon. Good for a whole year or whatever, you know. I mean, I'm not a stickler on this, but you can use it towards either an alert subscription or any of my downloadable courses. Not the ones I did with Steve or Peter, but my own courses, because we do the bookkeeping separately for those. But any of my downloadable courses, I'll give you a $50 rebate coupon that you can use anytime towards any course, not this one, but any other course, anytime during the whole year ahead. So you've got that. And whenever you want to activate it, just let me know. Hey, Ken, I want to buy, say trading short ETFs or trade mapping or whatnot, or a new course that I may have coming out. You can use the $50 gift coupon towards that as well. So that's a lightning deal bonus that I've got for you guys that I'm adding to the mix too. So anyway, that's our schedule. Core training coming up Thursday, the advanced strategies the following Thursday. And in this, we're going to be looking at some of the tipping points, some of the very specific advanced step-by-step strategies for entries and exits and dynamic position sizing and scaling, and looking at live charts together as a team. Really excited about this because this promises to be good, no nonsense, very good professional advanced strategies from me, a real trader. And it's a bargain, right? What is it? I was going to do $249 and give you guys a coupon code that would knock it down to $127, but I want to keep it simple, so we'll just do $127 out of the gate. That should be a no-brainer. We got a couple hundred of you registered, for my list and from all of you who are here tonight, so go ahead and register for that right now. It's at tradingplanprofits.com/. Now, this will become the homepage of the site right after tonight's broadcast, so it'll be on the main Trading Plan Profits site too, so you don't have to remember that link, but anyway, I'd love to see you guys there. I wanted to thank all of you for being here tonight. If you have any questions about what's going to be covered or how we're going to approach this and the rest of it, now would be a good time to ask, because I'll stick around another 10, 15, 20 minutes or whatever it takes to answer you guys' questions. So I'm not going to answer strategy questions. You got to enroll for that. But if you have any questions about what will be traded, what will be covered, and how it all works, feel free to ask me right now and I'll answer any questions. But anyway, Trading Plan Profits, Pro Training Webinar and Video. You got my word, this is going to be outstanding training. It's brand new. I'm going to give you guys stuff I haven't covered in any of my industry articles or my money show appearances or equities or active trader or my other webinars or the rest of it. It's all going to be primarily new strategies to build on what we've covered tonight and really give you insights in terms of not only professionally managed small ball trades, which alone would be worth a good $497 or $500, which I should be charging for this, but I want to make it up on numbers, and I do. Huge turnouts. It's easy to me to get anywhere from 60 to 250, 300 folks in my event. So I want to make it a bargain. I'm not charging no $1,000. I saw some guy actually trying to offer something at $1,000 for some online training that only lasted a day or two. I said to myself, what a freaking ripoff. Anyway, I like to make my stuff good, professionally priced. I'm a real trader, so there's credentials and the rest of it. And it's just $127, so that's a good bargain. This is the lowest price it'll ever be at. When I relaunch it as a downloadable course, likely late December or early January, it'll be up at $249, and that'll be the standard price from then on out. So you guys know, if you've been with me for years, I always give the very best content and the best pricing for all of you who are early adopters and jump on board soon rather than late. So don't procrastinate. You'll get two good professional. If you make just one good trade, or maybe even just half of a good trade, more than make up for a tiny tuition, which I ask to cover expenses and to make it worthwhile for me to do. So anyway, I hope that I can share with you some strategies that'll work. And thanks for being here. I appreciate it. I know you've got other things you can do with your time. I hope this is a good use of time. Remember, the core thing is, even if you don't sign up for the pay event, I don't care. I'll still eat steak and lobster. I'm rich. But, he just says that with complete lack of humility. My wife is from Japan, and she's just shocked at the things I say. But timid salespeople have skinny kids, as Zig would say. So anyway, the main thing is, you should always ask yourself, not if, but when. When do you scale into your winning trades? Now, you might want to, I'll cover this I'm running out of time here, but I'll cover these strategies in the ongoing premium 2 webinars I got coming up. But for example, I'll give you one quick insight or one quick tip. You don't have to double your trade. Let's say you start off a trade with, say, just 50 shares or 2 contracts or 2 lots. You don't have to double down like you're playing blackjack in Vegas. If you've got say an 11 and the dealer's got a 6, I would quadruple down, but they won't let you. Let's say you've got I used to play blackjack a lot at Bellagio, but anyway, let's say you're in, say, 50 shares. You can add 10 or 20 shares. That's a good baby step and a good professional, honest tip I'm giving you guys for free. Think about that and test it and see how well it works for you. You can see all the different testimonials on my site, so hopefully it'll help you guys make better trades. And in the end, when you're trying to make more money, you should always be asking yourself how to manage a process that you can repeat over and over again. Just like in businesses, for those of you who have a former, like I have, the Fortune 500 background, and you've been with big companies and you go to executive staff meetings and steering committees and all that kind of Dilbert cubicle life, which I'm glad that I'm 20 years free of now, being a wealthy entrepreneur and trader. But if I were back in that life, I still use flowcharts to help people figure out how to improve what they do. It's like, hey, we got a purchasing process with our vendors, their tier 1 lead supply base that's costing us money. How do we fix it, Ken? Well, I'd come in and say, give me the top 7 activities you guys do and where are things going sideways. Like you go on a first date and she's asking for steak and lobster. That's going sideways. You want to fire that trade or not go on a second date with that person. In your trades, or there's other warning signs of which we don't have time to cover. But in your trades, there's always warning signs. Not the least of which is it's starting to turn a little bit red. How do you scale out of that thoughtfully and intelligently with strategy and focus and step-by-step trading entries and exits that dynamically make sense for your success as a trader? It's really exciting. There's a lot to cover. I'm over time, so I apologize for that. We were supposed to wrap up 10 minutes ago. But I do want to leave you with a process that you can start testing and using. The devil's in the details, right? I mean, these are the top-level strategy points. The mechanics of how to do that is what you can enroll for in the premium event coming up. And we'll go through each of these with specific strategy bullet points on how to trade those and how to make it work for you in your own trade. So do this, on your terms in a way that makes sense for you and register your spot now for Trading Plan Profits. Love to have you guys there. And again, you get downloadable videos of both the core and advanced strategies, and it's only a tiny, teensy, ridiculously small. I should be charging more than this. 100. That's what my marketing guy said. He said, "What, are you nuts?" I said, "I'll make it up on volume. I'll get 500 people in, so it's worth my time." Anyway, 127 is all I'm asking for. Well over 2 hours of content. I will definitely go over on each of those. I'll just tell you ahead of time. So tell the wife or husband or kids or whatnot. We may go 9:30 or so on these. But I will be giving you good advanced specific strategies and things that you can start using to dynamically manage your trades a little more intelligently and hopefully a little more successfully. So go ahead and grab your spot. I'd like to see you there. Now let's see, I got a bunch of questions. Let me see what we've got first. Will I cover day trading? Yes, we do cover intraday trades. You're right, Damon. Where can I find the trend indicator from Isaac? Well, the trend is the ARMS index and goes a little something like this. A tip is the trends are divergent. You've got a New York Stock Exchange trend and a NASDAQ trend. This is a long trend in the NYSE. This is a short trend in the tech market, the NASDAQ. The trend is an indicator. You got to ask your charting software company for the ticker, but it's typically just trend, TRINQ for the NASDAQ trend, and TRIN just by itself, TRIN for the New York Stock Exchange trend. And that's the ARMS index, so that's another good market internal. Hey, Mura, question. Sometimes stock goes down and then continues that much further. How do you know the trend is over rather than a small pullback? That's a good question. We can cover that in the premium event, but just to briefly cover what I do, at least in my own trades, is I always expect that anything less than a continuation uptrend is the beginning of the end. Bump, 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 bump. I learned the hard way. So, for example, Hawaiian Airlines, it ran up, it had a nice run, but big red candle, warning sign, it may keep trending down. I would expect it'll keep trending down unless we get a recovery gap or unless we get a breakout up here. So, I guess just to quickly answer the question, other charts, however, like JBT, that do have a continuous uptrend that looks nice if it gets over the shooting star, or DuPont, have no such pullback. The trick is to look at, I guess the smart question to look at is what is it doing from a relative strength standpoint compared to the S&P. And if it's outperforming the S&P visually, I'm a big fan of visual trade management. As a professional trader, you got to be. One of the things you got to do is look at the differences. So DuPont's still healthy and alive and kicking. We got a bearish upper shadow, so it might drop a bit, but overall it's a healthy chart. The S&P is an unhealthy selling bounce chart. So when I do look for longs, I like to give preference to those that have recent strong momentum strength that's outpacing the broad market. So that divergence is one of the things that I like to look for. Let's see, a question from Damon here. As I stated, I guess they're, let's see, a time frame. Yeah, you use the, for any of the trades, for either swing scans or any of my swing trades, yeah, you use what the chart's telling you, but you also want to use the time-based stop because you don't want to tie up your capital needlessly if something's going sideways and just treading water. Like Autodesk. Let's say you're long, I would say you should sell this whole thing if it gets down to 59.50 and use a time-based stop. And the way you do that is to tighten it up the further time goes, like a logarithmic curve. So let's say it just grinds around and next week it bounces around between 61 and 63. I might edge my, let's say closes one day at 63, I might edge my trailing stop up to 63 and let the market noise take me out and lock in a profit because I want to reallocate that over to something else that's, say, the latest hot chart that's running out. So when things start to slow, you want to scale out of that trade and release that capital so it can get in a better performing current instrument that's in high momentum mode. So those are the type of chart patterns you want to look at. And yes, Steve, this is being recorded. So, see a question from Dan about technicals. A little bit, kind of like what I've covered here so far. The main thing, though, is on P&L management. The main strategy point is how do you know and how do you set decision points, or how do you take action as to managing with your unrealized P&L, and how do you graduate that and mature your trade into winning trades? When do you scale the wins? When do you scale out of lost trades? And how do you put that in context to the technical trading picture that chart is teaching you? So yes, to answer your question, yes, we will have ample coverage of technical signals as well as the P&Ls. We use the technical signals along with the P&L to make a intelligent, combined trading decision. So you don't get out of your trades just because something lost support. You want to expand the vocabulary to get out of your trades based on what the unrealized P&L, the money flow, is telling you in that trade. And that's what I like to cover for you guys too. Because it really is all about your unrealized P&L. You have my word on it. I wish I had known that 15 years ago. I thought it was all about the charts. Boy, I was wrong. Unrealized P&L management is the key. See, I don't care where these charts are. I don't care if, whatever this was, I didn't put the ticker. Actually, I did. Where's the ticker on it? Anyway, I don't care what the chart ticker is doing. What I care about is... Okay, so it's in the inverse ETFs. Anyway, what I care about is if this $300 goes down to, say, $280 or $250, I'll collapse the trade and take the profit. I could care less if there's a loss of support or a candle pattern or a Western technical. I just care about taking the money. Okay? I mean, I'm very upfront about that. I trade the markets to take money out of the markets. I'm extremely mercenary that way. It's a big market. There's a lot of liquidity, plenty to go around. If I'm up $300 in a trade, I want to take at least 250. If I'm up 230, I want to take at least 200. If I'm up at 158, I want to take at least 120. I'm just telling you right off the top of my head where I'm going to sell these puppies, or where we're alive in these right now. This is earlier trades where we'll be selling. If it's 119, if it gets back down to $100 in the money, I'll sell it all and take my $100. I don't care about the technical picture. I care about the money-taking picture. Okay, that's kind of the difference between professional traders and would-be market analysts and people who trade to try and become analysts. The profit-seeking piece of your trades is all about the P&L and all about unrealized P&Ls. And that's something that the trading industry does a woefully horrible job of educating traders in, because most of the people who teach traders aren't real traders themselves. All they can do is talk technicals. They can't talk the money. If I were doing this live for Money Show in Las Vegas or New York or Dallas or wherever, I'd say on the count of three, everybody say, "Show me the money." 1, 2, 3. So they can hear it down the hall. 1, 2, 3. Show me the money. And you get 250 traders saying that. It gets kind of exciting. Then I say, on the count of three, everybody say, "Ka-ching." Look for good momentum breakouts and make sure that you're managing based off the order flow, the money flow, not just the technical picture. You need to do more of that and less of the charts. More of the P&L exit and less of the charts. And that's really important to get right. But good question. Kind of long answer there for Dan. But let's see, question from Inchan about, I mentioned that I placed a trade pre-market. How do I trade at pre-market? Broker's not open. Well, yeah, you can trade pre-market by using a good professional broker. Like I use Interactive Brokers. You just have to manage it. You have to set it up so that you do allow extended hours trading, but that's a question for your broker. It varies depending on the broker. But yeah, sure, you can trade pre-market. I often sell pre-market gaps into strength at the first sign of a pullback, so I lock in a gain on overnight swings, a gap in my favor, and start to come back down. I want to lock in the money before the bell, right? Because I don't want it to drop 3 points, before the market. I want to lock in, if I'm up, say, 6 or 7 points, I don't want to give back half of it. So, yeah, you just use extended hours trading feature in your brokerage account. And again, it depends on the broker, but that's a question you can call them and ask. Hey, thanks, Dave. Appreciate it. Saying great stuff. Got to run. Yeah, we all got to run here. So let's see if any other questions. Do I use the same order types on every trade? I usually use buy stop limit orders on everything and sell stop limit orders. Yeah. Which the NYSE, the stock exchange, said they're going to get rid of stop orders come February. That's news that just broke today, so that's kind of a big picture. And we'll look at ways to manage around that in the upcoming webinars as well. So a lot of good stuff. I see a question from Don Kin. You say to take early profits. How do I feel when you get out and the stock keeps going up? How do you deal with that? Well, I take the money and I'm happy. Hey, if I would be perfectly happy all day long to buy 14 and sell 17, and who cares if it ran to 27 without me? If I take 3 points out of it and repeat it and bank it, there used to be a game show where they'd hit a button and say bank, and they take the money. I'm happy. It's all about repetitively trading profitably over and over and over again. I can always buy a new breakout. So even if I got out here at 1740, I'm not saying I did, but even if I got out here at 1740 and I missed the gap to 21, I can always rebuy new highs, say today over 2580 or so, and sell into the close, or rebuy if it gets over 30, like I said earlier. So I look at incremental entries and exits. If I have a good strong trend that doesn't stop me out because it's nice and well mannered like this one, well, that's great, but those are rare. Kind of like a unicorn chart. You don't see those but too often. My favorite stock in the known universe is Disney. My favorite company in the world is Disney for a lot of reasons. But look at the 5-year chart of Disney. Now, I bought the pivot. I did buy the pivot on Disney. But, look at that chart. What a chart. Pshwang. Only went from 20 to 120. So anyway, nice, strong, well-defined, sustainable trends that have minimal chop and pullbacks are a rare beast to find. And you're hard-pressed to find them. More often than not, what you'll find are charts. And I know Trader Mura had asked about this too. If you get a pullback, what do you do then? Question mark. And I'll be answering that and more in the upcoming premium events. So anyway, y'all have been amazing. Thanks for being here. I appreciate it. Go ahead and order your spot. I'm a real trader with proof. It kind of counts. More than you would think, by the way. I get all these horror stories from traders. I spent $5,000 on Guru so-and-so, and then I found out when I asked him he didn't even really trade. Grr, and they get upset. Well, yeah, up front, make sure whoever you're learning from can prove they trade. I've been saying that. I even got spokespeople to make a video about it and everything because I'm a big fan of proof, because I'm a big skeptic, as we all should be. Be skeptical about the educators unless they can prove it. Be skeptical about the charts unless they continue. Be skeptical about your exits, and make sure that you're learning how to do it from a real trader. So again, why is this so cheap? Well, because I make it up on numbers. I got so many of you here, I don't got to charge $1,000 and still make quite a tidy tuition. Makes it worth my while to get on stage in front of all of you. And so I want you guys to learn how to do it. I'm really excited to see the community aspect of this too. I'm really pleased to see nearly 200 comments from all of you, and I really appreciate the kind words. It means a lot to me. It makes for a lot more exciting site to read too. Go back and look at some of these, and we'll cover this and more. This also helps me decide what to cover, and hopefully I've gotten a good start on it tonight. I know we're quite a bit over time, but a lot of smart questions from you guys, and I want to make sure to stick around and do a good job of professionally, honestly, thoroughly, with good advanced actionable tips with proof, teach you guys how to actually trade and make things work. So learn how to make profits on the right side of the market from Gil is his comment, and that's certainly what I hope to be able to teach you guys. So just looking through some of these at random. So go ahead and register now for Trading Plan Profits, and I will see you guys coming up in both of our premium events. Coming up Thursday and Thursday the 3rd and the 10th are core and advanced strategies. TradingPlanProfits.com/now. I'll make that now page the home page in a few minutes, so you can just remember Trading Plan Profits. I got a couple of weeks. There's not any big urgency or anything. I mean, I'll be doubling the price of it after this event, but for now, until December 2nd, you guys get in at a bargain, and you get both webinars. I don't want to just do a single webinar. I want to give you also the reason I do dual webinars is not only to cover core training that extends and goes beyond what we covered tonight, but also gives you time, at least a week, to give some thought to it and bring your questions to the advanced strategy session. We'll do an extended Q&A at the end of that, so you can give some thought to, and between now and then too, test out what I've given you some good initial thoughts to, and then you'll learn additional strategies, many more specifics. On purpose I cover some general what you got to do tonight. We're going to cover how to do it in the premium events, and I'll give you all that on the 3rd and again on the 10th with advanced strategies that go beyond what we teach in the core training, and also give you a chance to come to each session armed with questions. And if you want to have a real trade walkthrough, if you have any of those, I'd be happy to troubleshoot those as well. So I'm here for you guys, and make bigger winning trades more often, and I'll see you guys in Trading Plan Profits moving forward. And thanks, Sean saying first time here, nice presentation, we'll join in December. Cheers. Yeah, thanks. This is how I build long-term customers, by the way, too, is I give you guys rock star content. I'm one of the world's top experts in my field, and I should be charging $497, but I undercut the market and give it away at $127, a total bargain price, and the content hopefully helps you make better winning trades, and you can reinvest some of your profits in additional training with me, which is also bargain priced. I'm not out there selling $5,000 or $10,000 stuff, so excuse me. It's wintry here in Colorado. We had the biggest snowstorm of the year day before yesterday. But anyway, look forward to seeing you guys there. It's a great deal. You have my word on it, and I'll give you some good actionable strategies that you can hopefully start using to turn the corner in your trades at Trading Plan Profits. Thanks, everybody. See you then. Bye-bye.